If you think all investments are the same, you are absolutely wrong. Welcome to Monday Money Moves. I'm Michael Abayomi, also known as Springboards, and of course, I'm the Group Managing Director and CEO, Asset and Equity Group, a foremost and a leading investment banking group in the heart of Lagos Island and Victoria Island, Lagos, Nigeria, and of course, in other major cities of the world. Today, we will be looking at the world of alternative investment with focus on the nature, the forms, the structure, and of course, the sweet and sour sides of the topic. From time immemorial, humans have been known to possess the ability to multiply. This is a characteristic that many attribute to God's pronounced blessing on mankind from beginning of creation. Others simply consider nature as something that formed out of some collision of chemicals and scientific substances, and so on. No matter what side of the divide you are, the point here is that man possesses the innate ability to grow and multiply. Beyond that, we humans also have the capacity to take things to a whole new level, okay? And this invariably leads to the creation of other things, including, all kinds of fields of knowledge like science, technology, mathematics, medicine, economics, accounting, finance, and the rest of all this body of knowledge created by man. In all of this, it is circumspect to say that all these fields of study have evolved over time. And they have, however, led to new discoveries that, have abundantly improved our ways of life and then living standard by extension. At the center of it all is the world of finance and investment. As a matter of fact, I always say that finance and investment is the first calling of every man. That is the number one calling of every man. That is, every man has one thing or two to do with money, okay? And if that is the case, then every man must learn to grow their money. I remember as a child when I asked my mom to buy me some expensive stuff, her response was always like, oh, please, so I don't have a tree that grows money in my yard. So I'm like, okay, I would laugh, but then it logs somewhere in my subconscious that if you want to be able to afford the things that you want in life, then, or maybe just general things, material stuffs, then you need to get a tree that grows money in your yard, but not literally anyways. So talking about finance and investment, there are three key things you can do with your money. That is, I take that again, if you have money, there are three key things you can do with your own money. Number one, you can spend it all you like, okay? You can blow it on your fantasies, you can do whatever you like with your money, and it's good, okay? I don't judge, I don't condemn you for doing that. You can do that, it's good. But then you can, do it something better. You can save it. That is something better. Yes, you can absolutely just save your money, and just keep it in one savings account here and there. At least it's a better option when compared to blowing it all out. And the third that is actually the best, in my opinion, is to invest your money. It is the best decision because that is the only way to be rich forever. Now, in finance, we recognize two major types of investments. And the first is traditional investment. By traditional investment, we finance people often, relate this to asset classes like bonds, cash, real assets like equity shares, and then maybe, assets that generally, give capital appreciations or maybe dividends and interest or maybe earnings, okay? So traditional investments are to be contrasted with alternative investment in this case, okay? So we said the first is the traditional investment, and then the second will be the alternative investment. But before I go into details of alternative investment, I need to, put some touch to what bond is, what cash, the equity shares and the rest of it. So bonds basically are debt instrument. I mean, a mechanism through which companies, organizations, government, borrow money from the public or from individuals or from institutions, so on a regular basis, the governments of countries or even companies, when they have new projects, always issue bonds to the public to invest in the company, and then so through which they can more or less raise funding. And of course, there's a challenge with bond, which is more or less interest rate fluctuations. We all know that bond definitely has more or less like a negative relationship with interest rates generally. So when interest rate is high, you definitely know that your bond will go low, and also that's just basic about bond. That's like the downside of bond. So another one, looking at traditional investment, is cash. Okay, cash also is more or less a liquid asset, and it's even though it comes with low kind of interest or low return. Okay, but then cash is cash. People continue to say cash is king, although I believe cash flow is a kingmaker. But then cash is cash. It's more or less like positioning for opportunity. So some people or some entities, companies generally keep some level of cash in their portfolio as an investment class in a way, just to position for opportunities that come their way. Another thing is the equity shares, like you buy shares from companies. So when the company's valuation increases, definitely you benefit in the gains of that company, talking about the capital gains. And of course, you can also benefit in the dividends that they pay out. And of course, there's one or two benefits like that when it comes to those kinds of traditional investments. So the commercial real estate is also a very prominent option in the pool that you can explore, looking at office buildings, retail spaces, hotels, warehouses, like commercial buildings and the rest of it. But then what makes it traditional is the fact that it's, when you invest in a real estate fund, that is a fund that invests into real estate, you more or less buy a unit of that fund, representing something like you're buying a share of a company. One of the options also is equity, buying shares of a company directly at share price it could be an IPO, and it could be from the secondary market. But then it's still all traditional investing, investing in stocks, and then in some cases you invest in mutual funds, you exchange traded funds, some form of asset class that come in the form of traditional investing. So according to the Harvard Business Insight, there are 7 major types of alternative investment. So now we're going to be talking majorly about alternative investment. And number 1 on the list will be private equity. Okay, this is a topic I'm quite passionate about because I do this myself. So private equity basically is more or less a capital investment made into private companies, that is, companies that are not listed on any stock exchange or any structured exchange anywhere in the world. So basically, they are companies that are maybe just starting or at growth stage, or maybe even established ones, but not listed in any exchange for the purpose of trading shares and stuff, or trading their stocks publicly. So it's more or less like private investment into that company. So looking at private equity in its broad view, okay, you would say it has a few tentacles here and there. Okay, so one of it is venture capital, which focuses mainly on startups, early stage businesses, working with founders and the rest of it. And then the other one is growth capital kind of structure, which is more or less the private equity as in the real sense of it. They work with matured companies at growth stage. Maybe the company wants to restructure, or maybe the company has a new project or has some form of expansion plan that they're trying to get more or less scale. So That's what growth capital does. And then there's also the buyout option where companies sell divisions of their company or outright selling of some part. So the point is, private equity is an alternative investment to people who feel that, oh, they have done a lot of traditional investing into stocks, then bonds, and the rest of all these traditional financial instruments or financial investments and all. So they come into the private equity space more or less to diversify their portfolio, and as it has its good side, then it also has the bad side. And one of the bad side is, you really don't know the company so well. There is always these counterparty issues because there's no exchange, there's no intermediary. There isn't really any major intermediary between you and the company you're investing to. So it's always a challenge finding the right fit for your kind of investment, and that's the major downside for PE investing. So another one in the world of alternative investment is private debt. Okay, private debt are usually debts that are not financed by the banks, okay, by your regular licensed institution. So they are usually funds or finances raised through or raised from private individuals or companies, institutions, and then it is private because, like I said earlier, it is not from the bank. It is more or less peer-to-peer lending or maybe company to company trading, giving funds to each other. So, and it's a very good way to invest your money as well. Remember, we're talking about investment. At the end of the day, it's all investment. So you can use your money, give it to people who need it for certain kind of project or certain kind of businesses, and then they return the money back to you with interest. So it's all more or less, although it's a risk asset, but then it's still an asset to you, and it's generating income. Another alternative investment out there is the hedge fund. So hedge fund is more like it's like your regular mutual fund, but then it always targets, it targets high returns. So it's what I call the fast lane investment. So some companies, some PFAs, by PFAs I mean the pension fund administrators, some institutions, individuals, high net worth individual basically, they try to take advantage of the positioning of an hedge fund, looking at, hedge fund usually will look at taking advantage of volatility in the market, the arbitrage, positioning for market neutral positions, or more or less taking long short equity position or deals. So all targeted towards making a higher return than what your regular investment would provide or will produce. So appearing here once again is real estate, at number 4 of, I think this is the 4th one in the alternative investment space. So real estate here is, remember, the first in the traditional space. We talked about real estate coming in through a fund, like a REIT, like a real estate investment trust, like a fund that invests into real estate. But this type is actually making investment directly into real estate. You could buy timber lands, you could buy land itself, commercial land, you could buy farm lands. You could do some intellectual properties, like you could even buy art. It's all part of real assets. Definitely when you are doing this, you have to be really careful, because fixed assets generally, or let me say real estate property generally come with some degree of risk, especially when it comes to origination, ownership, government risk, regulatory issues, and then indigenous people issues, and all of that. Then you can also look at when you're looking at investing into art. You should always also focus more on the fact that what you see as valuable does not necessarily mean it's going to be valuable to other people. Okay, you think you like art, you could pay millions to acquire one, but then I don't feel like I really want it. You really need to understand the dynamics of whatever it is you are putting your money into. You don't just put your money blindly into what you do not understand. Like the famous Warren Buffett will always tell you, I don't invest in what I don't understand. I understand Coca-Cola, that's why I'm investing in it, and that's it. I expect you to practice the same. So another key one on the alternative investment structure is the commodities. Okay, commodities are also moving wave. There are things you should consider, like the oil, natural gas, precious and industrial metals. All these things are also quite some very good asset classes for you to consider when investing through the alternative means. Okay, another very good one is collectibles. People definitely buy vintage stuff. So collectibles is more or less pointing straight to vintage items, like old, very, very old cars, very, very old wines, baseball cards, like some ancient stuff, like even artifacts and all of that. So people invest in all these things, believing that it will be worth a lot more within in the future, or in the nearest future, or maybe even in the long future. Okay, so people hold collectibles for as long as 20-30 years, and then they make earnings from it, and they have their ways of classifying it and making something meaningful out of it. So number 7 here would be the structured products, such as derivatives, fixed income funds, like the collateralized debt obligations, like credit default swaps. All these products that allows you to more or less defend yourself against some level of volatility, and of course still earn some profit, or say interest in the process. So all kinds of securities bundled together into a fund, then being given out to customers, high net worth individuals mostly, and of course some institutional investors also take advantage of all these structured products, and for the exact purpose of enhancing their portfolio. This derivative generally gives you that leverage, or it gives you that opportunity to have a well diversified kind of investment portfolio. So basically, structured products can be quite complex, and they are commonly created by investment banks and offered to hedge funds, organizations, retail investors. That's like can be institutional or individual, and when we say individual, it's usually high net worth individual. So guys, before I tell you the risks associated with investment, or say this investment type, please note that you have this once in a blue moon kind of opportunity to invest in a company licensed by the Securities and Exchange Commission, which goes by the name Converge Dynamics Capital Limited, also known as CDCSL. Okay, it's a member of the Asset and Equity Group, and it's a company that we have formed. It's been existing for quite some time, and we can vouch for the credibility of the product. This product is the real deal. It's a real estate investment trust, also known as REITs. It's spelled REIT small s. Okay, so this is an investment structure or investment product, with an underlying asset of about 20 billion naira in final valuation. So money, however you invest in this project, trust me, the fund is safe and secure. Like I said earlier, the company is a licensed asset management firm under the Securities and Exchange Commission. Also, all funds are insured by our insurance partner. So back to structured products. Structured products are relatively new within the investment landscape, and they are mostly the creativity of finance professionals to protect their clients, or to protect our clients from many risks associated with investment generally, such as liquidity, exit risk, more or less like the risk of exit. How easy will it be for you to exit whatever investment position you have taken. And then another one is concentration risk, and of course the asset devaluation risk. So guys, that will be all for this week's episode of your favorite finance blog, the Monday Money Moves. Up next will be the news of the week session. So guys, welcome to the top news session of your favorite finance blog, the Monday Money Moves. So our top news for today will be Harrison Street brings alternative investment expertise to Canada. Like I told you earlier, the alternative investment space is relatively new and the expertise is not all over the place, okay, yet. But then you see, you have Harrison Street, a Chicago-based investment institution, now moving, or let's say expanding to Canada to more or less practice or put to practice their expertise in Canada, investing to the tune of $550 million, investing in senior homes, schools, hostels, student housing, and all the kinds of stuff, alternative structure of investment, different from the traditional stock, bond, equities here and there, it's quite different, okay? But this alternative investment is more or less, something that emanated from the 2007-2008 global crisis, which saw a lot of funds or a lot of investment crashing down and going down the drain, So investment experts, or let's say finance professionals generally, will definitely come up with different ideas and try as much as possible to be creative, coming up with things that can cushion the effect of sudden economic shakes or say sudden economic shocks. So basically, alternative investment, of course, is here to stay, but then it is also here to mitigate some kind of risk that would have just generally washed down entities, high net worth individuals and all, bring their valuation or even their estimated net worth down, okay? But then with the help of this structured alternative investment, you now have, you can now have people structuring your investment portfolio in such a way that it has properly diversified asset classes, it has uncorrelated product services within a single portfolio. And that's the beauty of investing. Investment, remember in one of my earlier videos where I mentioned that investment has its definition. Investment must give some form of assurance in terms of in the area of protecting your principal, in the area of protecting that which you have invested into the business. Maybe there might be some shaky moments regarding the interest or the profit, so to say, but then the block investment itself shouldn't be tampered. You shouldn't be exposed totally to loss of capital when you're doing a proper investment. And that's why I also talked about the difference between investment and speculation. So in this kind of alternative investment, you don't really do so much of speculation like stocks. No matter how much research you have done into investing in any kind of equities, definitely is still speculative, because there are still some other people, some other factors that will eventually engineer what outcome you get along the way. So thank you for joining me in this week's top news session of your favorite finance blog, the Monday Money Move. Up next is the quote of the week session of your favorite finance blog. So guys, welcome to the quote of the week session of your favorite finance blog, the Monday Money Moves. Our quote of this week's session of your favorite finance blog is, there has never been any recession where everybody became poor. So I take that again. There has never been a recession where everybody became poor. And why am I choosing this as my quote for the week? It's simple. Because definitely, if you think you would stick to one investment portfolio and stick to traditional investment, A lot of people have moved on from that path and now are enjoying alternative investments. So even if there is a global economic crisis and if there is a global economic meltdown, then the other alternative investment will kick in, and you cannot lose out on all sides. When your investment is properly diversified, you cannot lose out on all sides, okay? So that is the beauty of alternative investment. So have a properly diversified portfolio, and then, it is very important to understand that your business, you yourself and your business must connect with reality. I take that again, you and your business or your investment must have a solid connection with reality. You don't bet against reality. Nobody does that. Nobody will win betting against reality. You have to be able to structure your investment. If you already have some stocks, bonds, and commercial paper well invested into, then consider real estate. If you don't want to invest directly into real estate, consider a REIT, just like I've told you earlier in the video. A member of the Asset and Equity Group in the name of Converge Dynamics Capital Services Limited, also known as the CDCSL, is a subsidiary of Asset and Equity Group, like I said earlier. And we have high-level expertise in that area. We have hands-on professionals who are going to be in charge of your investment. And to top it off, your investment is insured by an insurance partner. And then the beauty of this is that investment possesses an underlying asset. Apart from you just putting your investment, there is an underlying asset to fall back to even if there is any issue. And the underlying asset is valued at, again, I mentioned 20 billion naira in final valuation. So guys, thank you for joining me on your favorite finance blog, the Monday Money Moves. Catch you next week.